All right, I think we're starting our recording and our webinar, so it's a pleasure to be with you. And so I'll start with from the presentation. You know, we're in New York. It's raining right now, but we're in a positive mood, and we're here to talk about digital revolution, I would say, right? And I'm not here alone, so we're here at this webinar with my fellow colleagues, Rayhaneh Sharif-Askary, who's the head of investor relations in Grayscale. Then with Mikhail Gurevich, who's a managing partner in BitBull Capital, and myself, Constantin Kogan, I'm a partner in BitBull Capital. So maybe just to start off, you know, we start off with Ray. If you can say a few words about yourself before we get into the first question, and then Mike, you'll do the same, and that's how we, you know, like present ourselves and then talk about all the burn issues.
Sounds great to me. So I'll kick it off. Thanks for having me on. My name's Rayhaneh Sharif-Askary. I head up investor relations and business development at Grayscale Investments. We're the world's largest digital currency asset manager with about $2.5 billion in assets under management. Through our 10 products, we provide safe, secure, cost-effective access for individuals and institutions to get exposure to digital currencies in the form of a traditional investment vehicle. And you know, day to day in my role, I'm constantly speaking with investors about the asset class, educating them and helping them to think about how it fits within their portfolios.
Thank you.
Yes, well, thanks for having me on. It's a pleasure to be here. Wish we were doing it in person, but you know, due to circumstances, it's probably safer. So I started BitBull Capital in 2011. Before that, I started a couple of tech companies. I was actually in the first class of Y Combinator. If you follow the tech scene, that was a while ago. So since 2011, since I started BitBull Capital, we've done a couple of $1 billion in investments across almost every single asset class. Right now, we have 4 groups in our hedge fund: real estate, structured products, venture capital, and capital markets. So we're pretty engaged across you know, both public and private markets, as well as you know, almost every asset class encompassing those markets. So thanks for having me.
Thank you, guys. And a few words about myself. I'm partner in BitBull Capital, which is the first cryptocurrency fund of funds. And we appeared in 2017. Between myself and my partner, we've been trading on our own since 2012. And it was a very interesting journey. We developed a diversified portfolio, and that's been successful throughout these 3 years. And we're going to talk about it a bit later. So here, right now, I think it's important to just attack the first question, right? We are in a short recession, as we hear from the Fed, hear from every day the news. You know, the stock market is probably having the biggest decline in the history since the Great Depression, and digital assets sometimes they follow the trend, sometimes they don't. So it would be interesting to hear different opinions of why is Bitcoin or other crypto assets are relevant at this particular moment of time. Whoever wants to start, Ray, Mike.
I can kick it off. Yeah, absolutely. That is the topic at hand. So I think some would argue that Bitcoin and other digital currencies, they were created out of a financial crisis, and many would say that this is exactly the kind of environment for which they were created. What we have is a new financial regime characterized by unprecedented monetary and fiscal stimulus. And I think now more than ever, folks are going to look to an asset class that has unique characteristics in that it's actually finite, and that this will be the opportunity for Bitcoin and other digital assets to actually demonstrate their value.
Yeah, I think those are pretty good points. One thing I would say is I don't know if I agree with the fact that, or I don't know if it's a fact, but I don't think they were created necessarily for a situation like that. They were just created Just like the internet was created 20, 30 years ago, right, for the purposes of research. No one knew that you could you're going to be able to order pizza from across the street using your phone, right? 30 years ago, that was not kind of the idea. And just like now, I think we're in the same situation. It's just another tool for us to be able to figure out. And that's why I don't get the hate for Bitcoin or really anything else. It's just a tool. If you don't like it, you don't need to use it. But I do share your enthusiasm in terms of the future and what that holds in terms of us being able to use these new amazing technologies like cryptocurrencies, like blockchain, in order to make our lives easier, simpler, and better.
Yeah, I would agree. I think we definitely see an interesting trend. Like Bitcoin as a concept was created in the times of crisis, right? In 2008, 2009, right? So it was born in this crisis, and now I don't think it's going to die, as some people are predicting. With halving, we're going to have some problems. And people, like, when the liquid markets will suffer, like a lot of people will go out of crypto assets. I don't believe in that. At the same time, I think one of the relevant questions that we should discuss here is, where are the new inflow of capital is coming to this market? Because we see a lot of projects who are struggling to raise money, or who are trying to reinvent as we go, like in this uneasy situation. So what trends do you see in this particular situation?
Absolutely. I think from our perspective, we're continuing to see significant demand for ownership of Bitcoin and other digital assets through the form of traditional financial instruments like the ones that we offer. I think within that category, it sometimes, in situations like these, what we see is kind of a flight to safety trade, where Bitcoin becomes the safe haven asset amongst digital currencies. And that's certainly consistent with what we're seeing at Grayscale.
So let me throw out a number. 400 million. That's how much in dollars has went into buying new Bitcoin, or just buying Bitcoin over the last year. Because so if we look at year over year basis, let's say Bitcoin is, it's up a little bit, but let's just say it's flat, right? $400 million is what was necessary in terms of the demand in order for Bitcoin to stay flat. So that's a fact, right? We know $400 million of new money went into just buying Bitcoin, right? So that's one inflow. It's a very interesting fact, right? Because the question is, who is buying that? There was actually news earlier today that I think Travelex paid hackers like $2.3 million for like a hacker ransom. So we know that at least $2.3 million was accumulated to pay off some hackers. But I don't know where who's buying the other 400 million. I would assume a lot of retail. I would assume a lot institutions are getting into that. So that's what's going into Bitcoin itself, right? As we are in the phase of accumulation, I think a lot of people, a lot of not only individuals but institutions are in the accumulation phase, not necessarily in the spending phase, not yet. That's number one. The other inflow we're seeing is into infrastructure, right? And I'll be very specific. So last couple of years, we've seen a lot of inflow into the mining infrastructure. Now I think we're seeing also kind of higher level stuff. So for example, Visa just announced partnerships with Fold. It's a new credit card, right? Where I think they're giving back 10% of what you spend in Bitcoin. Right, so that's very interesting, and then you can later spend this on airline points, and if airlines are going to be in business after last couple of months, but that's a whole different topic. So there's a lot of interesting developments. But one thing I would underscore is that I think again we're in the accumulation phase, and maybe a year or two down the line, it's going to be a lot more efficient to start spending Bitcoin when it's going to be easier to do so.
I would definitely agree with the question. And, we see a lot of interesting infrastructural partnerships and projects are being developed. Like I've heard recently there was news that Ethereum DeFi projects, they grew nearly 800% in the last year, as according to the report by, Depth Review. And we see a lot of activities in different parts of the world. And, we definitely heard the rumors, and some evidence and facts that, where there are very active negotiations about digital dollar. And to my knowledge, there's about 15 different countries who are trying to digitize their national currency, and a lot of infrastructural projects are in voting. They put largest public blockchain consensus algorithms, for the government, for big enterprises, and in response to the coronavirus pandemic. I know that Microsoft has made all of its events digital only until July and 2021, even if I'm not mistaken. So that shows us that words is the world is being digitized, and I'm sure that the interest is there now. So we can't say that the things are slowing down, but if we see that the things are they're getting up to speed, and they remain somehow constant. So maybe you can share some of the fun stories in your experience, in this current market, maybe some of the anecdotes, or something positive.
Yeah, I've been actually very pleased. I've been positively surprised. Anecdotally, the conversations that I'm having with existing and prospective investors are not ones where I'm having to assuage their fears or reassure them. It really has been encouraging the extent to which investors appreciate the broader, longer term narrative. And that is that, yes, right now in a world where all risk assets are selling off, or there's a macro shock to the system, Bitcoin is a nascent asset class. It's still very much a risk asset, and it's going to trade down in the near term with everything else. But that it's really a longer term story. And over time, as a lot of these folks have the opportunity to evaluate their existing portfolios and have time to start considering new opportunities, whether it's distressed debt or digital currencies or whatever else, that we're going to really see Bitcoin start to play a really meaningful role.
Yeah, I think it was. I agree. It was an interesting diversifier. Obviously, one thing that I think forgot from 2008. The lesson that was learned is that when excuse my language, when shit hits the fan, correlations go to one, right? And Bitcoin was definitely not an exclusive factor there. And I think that's it's actually very interesting. The reason why is because it is the only asset that was trading 24/7 all the time, right? So futures, obviously we have market futures, we have other asset classes that are trading outside of the regular trading hours, but Bitcoin was one of the few things that it just constantly trades, right? No one can stop, and that's the beauty of it, because in the truest sense of the world, it is a capitalist dream, if you will, right? There is no Federal Reserve. There's no kind of no one sort of can control it to an extent, like a lot of other assets could be. So I think we saw that play out when obviously tanked real hard, just along with everything else. But what was interesting also is that how quickly it recovered. That's number one. Number two, more than that, is so we've seen it almost predict what the markets are going to be doing on a day-to-day basis. So if you look at what Bitcoin was doing, and again, we don't really trade anything other than Bitcoin, so that's why I keep on saying Bitcoin. We don't really trade Ethereum. We don't trade anything else, just because of the liquidity of the market. So if you look at Bitcoin, and if you go back and you start looking at what it was doing every Sunday, you will see that it almost perfectly predicted what the markets were going to be doing, what the futures were going to be doing in the evening on Sunday, and what the markets were going to be doing when they open on Monday. So from that point of view, it was a very interesting indicator of sort of market activity. So that was just an anecdotal evidence on my end that there's definitely some potential in there for the traders out there to consider it as a kind of another asset class to take advantage of.
And I guess what remains is the question, like it's also like why the conviction remains so strong. Like besides the people believe that that's an alternative. Besides different like conversation that we're having on the positive side. What happens with the most recent sell-off? When we still see that the pattern shows that still the Bitcoin and other assets that follow Bitcoin a lot, they can lose value 30% a day, let's say, right? So, well, is there any strategies you would probably personally advise, how to mitigate those risks, and what a regular investor should look at this?
Yeah, I think again, I would emphasize that when you're looking at these short-term panicked sell-offs where everyone is looking for liquidity, leverage is being unwound, there's going to be volatility, and that Bitcoin was never created to be like a short-term hedge against these external macro shocks. And so for us, it's just about taking a much longer-term view.
Yeah, no, I agree. It's definitely. So what was the other thing that was very interesting is obviously, as we know, there was a ton of leverage in the system. So as the only asset that was trading around the clock got liquidated, I think a lot of thresholds got sort of kicked out, and a lot of players got liquidated and blown up. As a result, it was forced liquidations, and that drove the prices further down. But when it got to the point, so I think so there was like two basically levels where we hit. One is when not all, but substantial part of the leverage got cleared up. For the most part, you basically ended up with the hodlers, who lived through insane volatility. 40% down up in a day was nothing back in the early days, if you guys recall. So you have that crowd that sort of remained holding, right? And the other part to that are the miners. So if you look at the mining economics, we kind of got right to the point where for a lot of the miners, I would say probably the majority of them, it started to become inefficient, and that's where the mining economics broke down. So between those two pricing levels, I think that's where Bitcoin kind of, I think that's where we saw the floor. So that was very interesting to see in action, and obviously there has been a retracement since then to go along with the other markets. But no, I agree with Ray. It's for us, it's a long-term position. We're long-term believers.
Same, I would agree, and I think it's a smart strategy because it's a well-known fact that people use it more of a store of value, right? So to speak, like digital gold right now, as opposed to like the currency or any other utilization. So my other question to you guys also, in terms of your predictions, when you mentioned the price, and the miners, we're going to talk about the holiday a little bit later, right? So, but just in terms of the Bitcoin prediction, we know that in May we're going to have a major event, which is halving, right? And that's going to impact a lot of like the top 10 assets for sure, right? And what are your thoughts? There's actually two different I would say opposing predictions. One is obviously bullish, that is following the trends of previous years. Another one, which I'm going to talk about later, has a completely different view, and it would be first. I'm interested to listen, and I'm sure a lot of people who are listening to us just particular prediction, and why do you think so?
So I can certainly go first. I can't totally hear the question, but I think I was asked for some sort of Bitcoin price prediction. And I know that, our lawyers would have my hide if I attempted to discuss anything of that sort. What I will say is that, yes, we are very constructive on the intermediate and long-term price of Bitcoin, and that the halving, as is consistent with history, the last two halvings, has always been a positive catalyst.
Yeah, you know what? The longer I live, the more I realize that no one knows anything. So I would say that if anyone tells you that they know where it's going, it's probably wrong. However, what I would say is based on the monetary theory, based on the economics, right? What we're seeing, based on the $6 trillion that the Fed decided to print, based on everything that we're, including kind of, Ray, you mentioned obviously the happening in a month. All of that leads me to believe that we will see price appreciation. Am I going to claim that it's going to 100,000? Listen, I'd like to see that number. I don't think we're going to see that soon. But on an annualized basis, I think a 10 to 20% annualized return is within the realm of possibility.
Interesting, because I hope my sound is more or less audible. You hear me, right? Because I want to make sure that. So I apologize for the interruptions. We all have a certain bandwidth. Apparently, internet is not any different. So what I've learned so far. So right now we have about 1,800 bitcoins. Which is equivalent to the current price about $12.2 million worth of bitcoins at today's price. Our mine per day. So in May, the number cuts by half to 900 BTC, which is going to be about 6.1 million per day. So daily trading volume right now, as of BTC, is about 40 billion, and the total value of all BTC miners selling their entire block reward every day that will go from 0.305% to 1.525, and so that means if you do the quick math on a napkin, right, you'll see that this supply how the supply reduction is insignificant given the daily volume of BTC trading. So a lot of people also what I've read consider that stock to flow are irrelevant numbers, and they scrutinize and saying that yes, it will have a positive impact, but not tremendous, right, impact, and it might fundamentally actually take a completely different directions, right? So if you have a few words to maybe add to this point of view, or maybe provide an alternative view, that'll be interesting to hear.
So I couldn't quite catch the end of that, but I think we were thinking about alternative views around the halving. I think it's just part of a broader. It's the confluence of factors, including obviously what's going on in the broader financial markets, and the halving is important, and especially looking at it in the context of the other things going on, which is a future state where the value of fiat is going to be increasingly drawn into question, and Bitcoin will increasingly become hopefully used as a source of sound money, which is finite and that can't be controlled by government or any central authority.
Yeah, well, it's a double-edged sword, right? With a control issue. But so before I go into the halving, which I think is a very, very interesting and I think it's a beautiful sort of construct, if you will, right? Especially in the age of fiat currencies and whatnot. Right now we have. So think about how much drug trade and terrorism has been sponsored by the U.S. dollar, right? If you look at Bitcoin and other currencies, obviously there's the anonymous kind of aspect to it. But on the other hand, think about also all of the tools that have been built in order to make sure that anti-monetary laws and KYC programs and all of that are done properly, right? So chain analysis. There's so many other programs that that are built on top of this kind of network layer that are making it a lot safer to transact. So I think in the long term, Bitcoin and potentially other cryptocurrencies, but specifically Bitcoin, could be a safer way to do all of that the government sort of claims that it doesn't, right? So that's my one point. The halving, like I said, I think it's a kind of beautiful construct. We're going to see what's going to happen. Look at the kind of BCH, right? Bitcoin Cash. So there hasn't been any really impact yet, but what we have seen, because of the hashing algorithm is the same as Bitcoin, we had a bunch of miners switch from mining Bitcoin Cash to Bitcoin back. So other than that, I haven't really seen anything major happen. But again, no one knows anything that's going to happen. You can't read the future. But I think over a period of time, the economic sort of, the basic economic factors are going to play out in such a way where, yeah, we'll see the appreciation against the dollar. The Fed is printing trillions of dollars. Like, how can it not over a long term? So I think there's room for appreciation there.
Yeah, you see, I have guests here, right? So I'm not alone. I'm doing this webinar with my son.
There you go.
I think it's a great addition.
Does he have a wallet? Did you give him some Bitcoin?
Yes, he's actually selling with a discount. So.
Oh, cool. I thought he's a hodler. Come on.
He is a professional one. So, so now with this, we're getting into interesting topic you mentioned about the government and the future. So, I guess with all the fiscal stimulus and that's needed to support and aggregate the demand for the most vulnerable, right? Corporations, which is, again, I have my own opinion of this. I'm not going to start it, but we've seen a tremendous influx. We basically see trillions of dollars poured into the economy, and only some part of it will go directly to the taxpayers. Others will go to bail out the companies. So my question is, yeah, he's adding, he definitely knows the topic better than me. So, so my question to you guys: do you think what role will Bitcoin play in this, and generally digital assets? What will be the evolution? How will we cope with a situation where governments are printing money with increasing the debt, and there is no ending to this? Right? What is an alternative?
Yeah, again, I think it just goes back to when, whatever you think of the policy measures and their necessity, and really these are unprecedented times in which we're living. The reality is that these things are happening. The money supply, inevitably on a global basis, the value of these fiat currencies is going to be, eventually, I think it is going to be called into question, and people will look to an alternative, a sort of sound money and something that is finite. And there will only ever be 21 million Bitcoin. So I think this is very much an opportunity.
So what I would say to that, I don't think Bitcoin will ever replace the dollar, nor I think it should. I think there's going to be a lot of other uses, and there are already a lot of other uses right now. So we've been investing in all sorts of different companies, public, private. We've done, for the most part, we've done investments only in the United States. Only recently that we've actually extended into Canada. They're like our, basically cousins across the border. And what I would say is, interesting use cases. I love getting payments in Bitcoin, and the reason why is because I'm not dealing with the insane system that Swift is. Banks are not calling me asking me, what is this? What are these wires for? What are they from? Even as simple if I want to pay lawyers, or I'm getting paid for X, Y, Z. It's all obviously legit, but there's a lot of inefficiencies and slack in the system that Bitcoin eliminates. The other thing I would say is, people are saying, so there's a number of haters out there that are saying, oh, Bitcoin is not perfect and this and that. And here's the thing: nothing is perfect. It doesn't need to be perfect. It just needs to be good enough. And if it's good enough, hey, guess what? It's going to work. And that's just my 2 cents.
It's quite interesting because, like there's a belief that tokens will outperform venture for a several month period, right? Because tokens, they're repriced instantaneously, and that they have much more volatility on both the upside and the downside. And also that venture pricing is like typically it's lagging, right? And the number of deals, they dried up quickly. Many months later, when both sides, they finally agree where the supply and demand curves meet, and then you'll probably see the number of deals, pick back up, right? But then at a lower prices. So, if we see like this trend when the markets are stressed and people are trying to sell all crypto assets at the same time, Bitcoin much more liquid than everything else, so people are increasing the Bitcoin exposure and taking down the risk from the other assets, right? And some people even see that the major like top 5 S&P stocks, since 2012, like the correlation with Bitcoin and stocks, they spike sharply positive, like for the last 32 days. So my question to you is, what are the strategies, what would your advice would be like to someone who's looking at the situation where we are, right? And how to properly even like allocate the different, whether it's a project or if they're trading, maybe give some practical tips here.
I think for us, so for instance, our products, we offer beta exposure to Bitcoin and to other asset classes. And we actually, I talk to investors about this all the time, and it's the beta exposure is a really important part of the portfolio. But as you were saying, that's not to say that alpha doesn't play an important role. So it's really, it really just comes down to diversification and right-sizing the allocation to the asset class, whether that's 50 basis points or 3%, and taking a long-term horizon.
So, you kind of mentioned something interesting, and you said that there's liquidity to Bitcoin, right? So if you look at now I want to kind of expand on that a little bit and thought analysis. So if you look at two similar, let's say if you take two identical assets, one is going to be more liquid than the other, right? So if you look at, and there's a number of examples in the markets, in the public markets out there, if you look at the two, and you will see, and it's been proven many, many times, that the price of a more liquid one is going to be higher, right, than the alternative, than the less liquid one. So it's called liquidity premium, right? So then the question becomes, if we think that if we think that Bitcoin would be a store of value, could there be a liquidity premium associated with Bitcoin versus a number of other securities? And hey, even the equity markets, because guess what, they don't trade 24/7 every single day, right? So that's a thought analysis that I think that could be very interesting to do.
No, sure. I would agree. Like, and we see, look, we've been in an extraordinary 11-year bull market, the longest actually in American history. And this correctional period, was imminent, and just coronavirus emerged, as a catalyst for this economic downturn. But it was inevitable. Like, right now, almost all asset classes, they're taking a hit, and the massive pandemic is a black swan of black swans, right? And this one is especially like causing supply shocks and demand shocks, healthcare is only beginning, right? Systemic shocks will follow, we can see it in the economy, and different sectors will be the same. Now, it's and we can talk about like this ripple effect, for I'm sure for hours. But what I'm trying to also hear from you, maybe your experience, what would be your advice for people practically who are raising money in this in this period, which is definitely not easy. A lot of folks are saying, oh, please wait, we're not, we want to see what's going to happen. Maybe some practical advices.
Yeah, so we have been, we're fortunate enough to have seen fairly consistent inflows into our products during this time. I think we'll release our Q1 asset raising report next week, but I can say that we've had a really strong quarter, and I think now more than ever, everybody is going to have the opportunity to evaluate opportunities and to look to asset management platforms, funds, and service providers that they think are the most reliable. So I think, again, as always, giving clients and prospective investors sound advice, being thoughtful around the asset class is always going to be the most important thing.
So it's actually a good question. Let's go back to 2008, right? I think what we've seen, what lessons have we learned from there, from that crisis, right? We've seen a number of strategies and funds that have developed with a very defensive strategy, because the feeling after 2008 was that, hey, capital preservation is number one, right? So, what are the strategies that arose from there? Hard money lending, right? A lot of debt-focused funds. So, I think that same question could be asked right now. What are the lessons learned? Obviously this is not over yet. And NASDAQ is down less than 10%, right? I would not be surprised if you're going to see the market up this year, because at the end of the day, you inject so much cash and liquidity into the system. Like, how can you not have, kind of dilution in the market? Because that's what's happening, right? So, some things that I think are going to, obviously healthcare, right? Talking about injecting and giving people all this money, helicopter, sprinkling cash everywhere. It's, how does cash get to people, right? That is the question. I know at least 50 plus business owners, talking about small restaurants, small business owners, real estate brokers, 50% plus, and this is just like, I personally know, that have applied for the SBA government programs. Guess how many people have even gotten an application approved? Not talking about money, talking about application approved. 0, right? So how can blockchain be used in a way that allows the government to be more efficient? Because at the end of the day, there's only so much money you can throw into the system, right? If there's no flow, how can it be realized? So there was recently an announcement. I think it was like Tesla with partnership with the port of Shanghai, testing out blockchain to make sure that deliveries are going to be done more seamlessly. So that's awesome to hear, right? So we have legitimate governments with legitimate companies applying this innovative technology to make stuff more efficient. So I think a lot of work in the government, or basically funding companies and starting companies in the crisis, actually. So Paul Graham actually had a very interesting tweet a couple of weeks ago where he said that the chances that if you start a company right now of your success is actually higher if you do it during a crisis, which is a statistical probability that we know for a fact to be true. So maybe in this podcast we're going to have a listener that's going to start the next blockchain company that will allow government to be more efficient, and during the next crisis, when they want to drop helicopter money on people, they're going to use blockchain to do that, right? So, all the businesses are going to be blockchain in terms of having payroll, having all of that. You send to the government, you send to the banks, they process it, and then they do what they need to do in order to distribute the funds via blockchain. And hey, guess what? Maybe they're going to be distributing Bitcoin.
Yeah, and let's not forget that a lot of great companies, as you mentioned, were born back in 2007, like on Dropbox, WordStream, like in 2008, Groupon, Cloudera, then 2009, WhatsApp, Uber, like Venmo, Slack, others. So I would agree with you, because I think it's misleading to consider that because we have this pandemics, all the businesses, they stop. Definitely there's a big hit on the retail side of business, and many other companies, or connected to leisure and entertainment. That is clear. But to give an analogy, in 2000, during the great influenza epidemic, right? And when in December 1915 level, so 50% higher than through the entire pandemic in February to 1919, and the market ended up growing down 60% total by December 1920. So this portion was completely unrelated to the epidemic, right? And right now it's even more dynamic, and I see that if we see stimuluses of trillions of dollars poured into the economy, right, we definitely can see that venture capital trading firms, all the asset management companies, they're still active. They're just more cautious, I would say. And they're looking for a great unicorn still, right, in the blockchain space, and also in other industries. But my question to you, maybe you can share with some of the portfolio companies or some of the great projects that you can proudly say that, listen, this particular project actually, like you've mentioned, Michael, like there's Tesla or any other integrations, that are changing the world as we know it right now. Maybe some examples.
So I'll definitely let you run with that one. From our perspective, we are very much looking at the underlying tokens and passive investment vehicles. But, I'd love to hear what you have to say about things that you're finding interesting.
I guess I'll jump in. So, I really like, first and foremost, being able to create a accessible sort of vehicle for a lot of those that can't purchase it directly. So from that point of view, I really like what Grayscale and a lot of other guys are doing in that field. So I think that's a first step to making, kind of blockchain accessible to the masses, cryptocurrencies and whatnot. The next thing is, I really like what, Coinbase, what Fold, what those guys are doing in partnership with Visa, right? Allowing people to use sort of vanilla cash, but get the rewards in Bitcoin, because to the point that I was making earlier, right now we're in the accumulation phase. So I think that's a very, very interesting point to be in. I think there's still money to be made in the mining space. Got to be very careful, obviously, keeping a number of variables in question. And anyone that wants access to that, there's a number of publicly traded mining companies that are out there. So, but for them, I think for the masses, how do you get access to the venture capital world, right? Because that's really where a lot of innovation is taking place. So.
No,
or
sure.
If you're quarantining for 5 weeks, you can learn how to program and build a company yourself.
100%. And maybe someone who's going to listen to the answers, maybe they will be inspired to start their own project, whether it's going to add up, to the existing ecosystem, or build a completely new, interesting way of looking at things, right? And maybe digital currency 4.0, right? So we have one question, which I think it's that it makes sense to answer it. So one of the listeners is asking, what is the percentage of Bitcoin versus others in buying pattern?
So yeah, that's a great question. Again, in times of volatility and panic, we have seen flight to safety trades. You see Bitcoin dominance increase. Without, I think, again, we will look to next week when we're releasing our asset raising report, which will have some interesting statistics around that. But again, anecdotally, I can say that there is a lot of interest in Bitcoin, and Bitcoin has been our Bitcoin product, Bitcoin has comprised a significant percentage of the interest that we're seeing.
Yeah, and on our end, I said that before, we only invest in Bitcoin, and we only trade Bitcoin, and the reason why is because it's good enough. We look at a lot of other stuff, but so far, that's not to say there's not a number of other projects that are very interesting, have potential, but so far that seems to be the kind of the horse that's ahead of the kind of race.
Maybe I think it would might be interesting to our listeners if you can outline some of the alternative bets. Like if you, I know, Mike, you were only trading Bitcoin, and so yeah, you kind of bias in this opinion. But like, if you would like to look at others and recommend, like, and so as Ray, like, maybe top 3 or top 5, and some of the reasons why you might look as alternative ways how to diversify your investments besides Bitcoin.
Yeah, absolutely. So again, we can't really get into specific recommendations around tokens, but what I'll say is at the end of the day, the way we look at the asset class is that there are thousands and thousands of tokens. At the end of the day, most of them will go to zero, and it's going to look like the precious metals family, perhaps, where there's a handful that each serve a unique purpose and have a unique use case. So there is obviously Bitcoin and its role as digital gold in the future. There are tokens that deal with smart contracts. And so that's another use case that we think that is obviously going to be significant. There's the privacy space, so tokens like Zcash and Horizon, for instance. So I think that's kind of how we look at it.
So the only thing I would say to this point is, I don't remember what the name of the theory is, but let's say, if you really love Tesla, right? You absolutely love it. That's the only car you have. You probably own the stock. If the only shopping online you do is Amazon and you absolutely love it, you probably own that stock, right? I don't remember the name. Maybe you can kind of give me a hint, or there's a theory, right, that stipulates that, if you really love the product, you're probably going to be investing in that. So, I think the same thing could be applied to the tokens. There's some token out there that you absolutely love, and you understand what they're doing, and you're really engaged. That might be kind of the answer. And then if you're a believer, then that is it. That's kind of I'll say, how we approach Bitcoin for a number of reasons that I outlined earlier. The only exemption I would make is probably Ethereum, for the reasons of the smart contract. So there's definitely a use case for the Ethereum that has not been sort of realized in Bitcoin, but for different reasons.
No, that's I think those are valid answers, right? And probably there's going to be a disclaimer here, like it's not a financial advice, not a legal or tax advice. We're just expressing our own opinions here, right? So Bitcoin remains uncorrelated over the long run, but that doesn't mean it's going to have a correlation over short-term cycles, and doesn't mean like it's like risk-free, and there's a lot of misconceptions in terms of like the risk-off asset class. So maybe you can demystify some of those aspects, like, why do you consider it still a good investment, and just to a degree of analysis of approach, how if people want to diversify their investments and they're ready in real estate and gold and other like ETFs, mutual funds, why still digital assets are, their pick, why that should be the case.
Yeah, let me unpack that. So first of all, I don't think any of us would consider digital assets as in any way risk-free. These are very much risk assets, especially given that it's a nascent asset class. I think what you have is a new return stream that reacts differently to traditional market drivers, or rather has the potential to react differently to traditional market drivers, with the upside with inflation protection characteristics, and the upside of having exposure to technology. So I think there's a unique place in the portfolio for that, alongside traditional investments like stocks and bonds, real estate, other types of alternatives like private equity and hedge funds. So it's another way to diversify a return stream and take advantage of what is a new asset class that has unique characteristics and has the opportunity over time to be an uncorrelated return stream.
So I'll answer that question a little bit differently. Let's say, and again, to repeat kind of what you mentioned earlier, Constantin, is this is not a financial advice, right? Don't treat everything I say as if I made it up completely, 100% made up, no advice whatsoever. Asymmetric risk return profile, and what do I mean by that? Let's say you invest 1% of your net worth into Bitcoin. What's the worst that's going to happen? You're going to lose 1%. It's hopefully not the end of the world. Alternatively, Bitcoin, as we've discussed today, has a potential to appreciate significantly more than 1x, right? So just from that point kind of alone, I think it's an asset worth having, especially if you're only going to put in 1% of your net worth into it.
Yeah, I mean, that's a great way to put it. Thank you both for the answers. I would agree, asymmetric return profile, and there's a lot of other benefits, if you believe in diversification, if you believe in modern portfolio theory. There's a lot of great I would say institutional grade reports that was issued. We're probably going to focus more right now on the questions, because we have a few here. So one of the questions coming from Mark: do you guys see a demand for future contract trading on exchanges?
I think it's a little bit out of my bailiwick per se, but we're excited about all the new ways that investors can get access to the asset class and all the on-ramps. So of course, the more developments in infrastructure, the better.
So there's definitely demand for that, and it's simply because some institutions are not allowed to physically settle, and what is the physical settlement of Bitcoin anyway? So the only way to get access to it is through futures. So yeah, obviously there is, and I think it's a good just a regulatory step forward for the industry. So yeah.
Three questions, and I'll ask it anyway. So I think it's coming from Tejas, and I apologize for the mispronunciation of the last name or the first name. So can you talk about the closures with other hedge funds in the space due to the March 12 fall? I think it goes for volatility. I guess what he means is that some funds, close after a huge spike, and in a downturn. So, do you hear such stories, or most of your colleagues are positive and everything is fine? They just took some hits, or they closed their contracts and everything is fine.
So again, from our perspective, I think in any kind of there's always going to be, in periods of volatility, you saw it in 2008, there's always going to be funds that close. And the idea is that over the longer term, strategies that have staying power and companies that are well capitalized will continue to perform well and continue to exist.
It's talking about well-capitalized companies. It is amazing to see, and maybe amazing is not the right word. It's depressing to see how many big companies out there cannot weather, 2 months going, without sort of falling apart, right? I mean, you have absolutely massive companies, Fortune 500, Fortune 100, kind of going broke. So that's worrisome. Going beyond kind of crypto, I mean, Citadel, right? You've seen how many problems they've had. A number of other traditional funds that got blown up, nothing to do with Bitcoin. But I think in the Bitcoin or crypto trading space specifically, I think what we've seen more than necessarily funds blowing up is probably, what I would venture, is a lot of retail that have borrowed against Bitcoin, and a lot of I guess smaller funds that have been trading on leverage, their position got unwound because of the retracements. So just my advice here is, just be careful whatever you're doing, right? You just got to make sure you're practicing safe kind of risk practices.
Yeah, I would agree, actually. And just to add to this question and the previous one regarding the future contract trading, I actually see an increase in future trading, and a lot of the folks are shorting successfully, and some people who they some companies and their strategies, they are not able to be dynamic and to adapt to the changes. Yes, they can be they can be seen having like a lot of losses, and if they have enough, if they have a cushion to, and reserve funds to survive, I think they will flourish in the future, and they will try to make use of this lessons. If not, then yeah, that's equal to traditional funds or corporate hedge funds. The same idea as you mentioned. I guess at the end, because we're kind of like 5 minutes, probably let's be on a positive side. Let's just provide some advices to entrepreneurs, investors, whoever are in the participating in this chat, and whoever is listening to us later. What would be your positive key takeaways from this conversation, and maybe some advices how people can stay positive and safe during this pandemic?
Yeah, so again, for us, it's obviously a time of volatility. We're going to see short-term sell-offs, but again, our conviction in Bitcoin and digital assets, other digital assets, remains as strong as ever. We think that there are properties, that scarcity, it's a disinflationary asset, it's an option on digital gold, are important and will help to define the role that it plays in the intermediate and longer term. We're very constructive, and I hope that folks can continue to stay safe, stay home, and get through this.
So, times like this, I think, are a good opportunity to step back and reflect on life. So there's a really good YouTube channel called Primitive Technology. If you guys never seen it, highly recommend it. It's this guy that's just in the woods, literally has nothing, nothing, right? He has like a pair of shorts on, and then he builds like stuff in the woods, like a hut or a fire. I think so. It's a good time to step back and reevaluate and ask ourselves, why are we doing all of these things? I love mountain climbing. We usually do once a year, we do a trip with a lot of guys from my company, where we go climb a mountain, we remove ourselves from everything. So this is like a forced, way to do that. Just sit down, reevaluate. Why are you engaging in what you're doing? Why are you a fan of Bitcoin? What are the things that really you want to be doing? Obviously, there's a whole other aspect to it. Like, some people are obviously surviving. It's a battle for survival for a lot of them. I just want to say, obviously, big thank you to a lot of the medical staff, to a lot of kind of first responders. Those guys. I mean, that's the backbone of like our society, right? They're doing stuff. Like, it's easy for me to sit in front of the screen and talk to you guys about making money and doing all of these exciting things. But like, at the end of the day, I think those aspects of our society are what's really important. So how can we make their lives better, right? Whether it's using Bitcoin, or not Bitcoin, but blockchain, tracking masks, or using blockchain, dispersing payments to people that need it, that are running these restaurants and delivering food to us. So I think those are all good questions to reflect on at this time.
Yeah, I couldn't agree more. Just to add to your point, I think we definitely have a lot of great opportunities to apply introspection, to think of the values, to think of why we're doing what we're doing, who we are. Like, we're just not only investment managers or partners, or we are also human beings. We are interconnected, and there are a lot of things to realize, that we're not forced to have this webinars instead of like having coffee or meeting in the restaurant, right? So that probably nature gives us a lot of investment advices, like invest in ourselves, right? Invest in harmony. And I guess we have to appreciate these challenging moments, and just, as you mentioned, help others if we can. Like, I know a lot of our fellow colleagues donated millions of dollars, to charities, to support local communities, to supply food, to just buy masks, ventilators. I think those are great examples, and our healthcare providers are our doctors and nurses, and all the people who are fighting for their lives. I think those are greater examples, and they're alive and they're fighting for the future. And if Bitcoin or any other digital assets can help in this process, like, we definitely encourage you to learn more about it. So far, on this positive note, I really want to thank Mikhail and Ray for this amazing insights, and we're happy to have all the participants here. And I guess this will be posted after we finish, and you can listen to this in your due time or share it with all your friends. And thank you so much for being with us.
Thank you for having me.
Thank you, guys. It was a pleasure.